Christine Giordano. I'm here with Bob Jacksha. Bob, how are you?
I'm doing fine. It's great to see you again, Christine.
You too. Bob is the CIO of.
New Mexico Educational Retirement Board. We're a $19 billion fund for the educators in New Mexico.
We are here in Santa Fe, Bob's backyard, and I have been talking with Bob about what he's seeing that might be a bubble, might not be a bubble.
Yeah, there is a lot of talk about whether or not AI and data centers might be a bubble. And yes, I'd say it might be. Obviously, it's inevitable that AI and data centers will persist, but the question is, are they being overbuilt? And I don't think anybody knows that. There's a lot of different aspects to that, quite frankly. I think one of the things, you look at data centers and you look at sort of connected things to data centers, secondary things, and one of the issues is energy. We all know they consume a lot of energy, and you might worry, okay, is there overbuilding in energy connected to that? I doubt it. I think that's one of the safer places because we are underpowered right now, and we will need energy long term, even if data centers and AI are smaller than we expect.
So, what keeps you up at night?
Actually, what does not keep me up at night are the normal things that you might think people would say, the risk side of things. And that's because I feel like we made an effort to build a really resilient portfolio that it's not bulletproof, but it's resilient. It'll do pretty well under most conditions. Actually, what keeps me up at night is when I get really excited about opportunities, and literally I'll wake up in the middle of the night, you know, hardly able to wait to get in and start working on them. But I'll say right now I sleep pretty well. I don't see a lot of great opportunities given that market pricing is pretty elevated in a lot of aspects.
What's the last great opportunity that kept you up?
Oh man, um, that's a good question. It was, well, I can think of one offhand. The biggest one was after the GFC, when in particular fixed income, even quality fixed income, was priced to fail essentially, and you could buy investment grade credit at very cheap levels. That was a terrific opportunity. It was quite painful getting there, of course, but on the other side of it, it was a great opportunity.
A few years ago, we gave you a strategy award as being one of the few investors who did not lose money during the economic downturn that we had a few years ago. What are you doing now?
What are we doing now? It's nothing much different. It goes back to trying to build a more resilient portfolio through I call it intelligent diversification, meaning not just buying different things, but buying assets that will react differently in any economic environment, and the risks and returns are subject to different factors.
What are you doing around the US dollar?
What are we doing around the U.S. dollar? We don't really invest in currencies. I will say we probably have one or two managers who do something there on the periphery. We don't hedge our foreign currencies, which has been a good thing, may not be a good thing. We'll see. At various times, uh, it goes both ways, and we just don't want to take that expense, and we look at that as maybe another aspect of diversification as well.
And do you have any biases within your public equity portfolio? Any kind of stateside or um, global?
Yeah, we're relatively balanced to the global index. Uh, I guess I'd say one of our biases is we don't think there's much value to be gained in active large cap US management and even in the mid cap space. So we just index both of those.
Wonderful. Well, thank you for your wisdom.
Thank you. You're welcome.
Always a pleasure.